Hi. Did you know that only 22% companies that went public were actually profitable after their IPO? If you are looking at investing in upcoming IPOs, make sure you see this. This is how a company actually looks like after it goes public. Unfortunately, this is how some of the investors look like after a company actually goes public. So, what should you check before investing in IPOs? As per Statista, only 22% of companies were profitable after their IPO in the United States in 2020. Also, over 500 IPOs happen every year globally. Over 300 happened in China in 2020, over 200 in US, and over 50 in India. So, how do you find your lucky IPO? As per Investopedia, the key things to check before investing is to learn about the company and also read its prospectus. Economic Times also suggests investors to read their prospectus, understand the company's potential in the market, and also have an investment horizon. The problem is, who the hell reads a prospectus? Normally, a prospectus is over 1,000 pages. If you love your money and you don't have time, the minimum you should study in a prospectus is the summary, the business, underwriting, and financial statements. Of course, in theory, you should actually read the full prospectus. Summary talks about the mission of the company, when was the company formed, and what does it actually do. Why are the promoters in this business, and what is unique in their business? Under business, the promoters talk about the business value, the market approach of the promoters. It also talks about their top clients and brands that they might be working with, and they also share the growth numbers of the company. Underwriting talks about the lead book running managers, which are normally large financial institutions or banks who are responsible for the pricing of the IPO. They also have the responsibility of buying the entire inventory of stock issued in the IPO and sell it to the public at the IPO price. Financials, this gives you a direction whether the company is actually making revenue consistently and has it been growing. It also tells you about the research and development investment that the company is doing, and are they keenly investing for their future? Has the R&D spend actually been growing over the years? It also tells you if the company has been making loss or profits. Valuation is what all the investors want to know, if an IPO is overvalued, undervalued, or fairly valued. The traditional ways of checking on that is to check on the earnings of the company, the PE ratios, the PEG ratios, checking about the potential of the company as well as the industry, and any recommendations from experts. Unfortunately, there is no direct and clear answer on how to find the right valuation of an IPO. That is because IPO is a sales process by large banks to sell the offering to investors, so you have to be cautious of everything that you study. And most of the information available on IPOs are actually sales pitches. In fact, the more the sales analysts covering a stock, more is the hype on the stock. I have read over 10 global articles on this topic. There is actually no guarantee of winning in an IPO, so you should be aware that there is a chance to win, but there is no guarantee. In fact, there are research reports that suggest that the level of overvaluation in an IPO is positively related to the number of financial analysts covering the particular IPO. If I look at my checklist, the key things for any investor is to have domain knowledge about that particular industry, and they should definitely Google about the company. Secondly is prospectus, where they should go through the summary, business, underwriting, as well as financials. Sixth is definitely check around with friends if they have domain knowledge about the particular IPO. Seventh is official recommendations from banks and brokers, which every investor should go through. Eighth is investment size. If you are not comfortable after reading points 1 to 7, you can definitely reduce your investment size to make your investment decision easier. Ninth is time, which means there is no free money, and if the IPO actually drops, you might have to hold on to the stock for a long time to recover your investment. Tenth is the gut feel, where if you like points 1 to 9, you should definitely follow your gut feel and do not ignore it. 11th, of course, you remember me and do subscribe to my channel. I hope you liked my video. Thank you so much.